Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 28th day of April, 2015, and this is the daily report for gold and silver. We have absolute follow through today in the markets with gold trading higher. Precious metals pretty much across the board trading higher. First to gold, currently trading at $12.1150, up about $8.30. High 1490, low 98.60, and as I said, currently trading up about $8 on the day. Of course, you probably noticed that we do have a new format that we are going to be implementing and bringing in this week. We'll be using the eSignal platform, and I promise you, we will have some exciting stuff ahead in terms of the technical studies that we're doing and how we present the material that we're presenting. More on that in a little bit. Let's take a look at silver. Silver currently trading up about 18 cents on the day, 16.58. As you can see, the high 66, the low 27, and as I said, currently up about 18 cents on the day. So as I said at the beginning of the show, I'm very excited because we are rolling out a soft rollout, so to speak, of the new platform that we will be using. A new layout, of course, and most importantly, a way that we organize the studies that we're working with. And as you can see on our primary screen, we've got our Elliott wave count. This, of course, is our short-term wave count on a daily chart. We've got our Japanese average charts with the simple moving average, momentum index, and MACD. We'll look at some longer term studies, but the one thing that you'll like is we will have Elliott wave count on all of the markets that we look at. This is all in anticipation of the rollout that we'll have beginning of next month with our new Standard & Poor's NASDAQ service, as well as a currency trading service. We'll have those available to traders. You can email us, but our launch date really is going to be really the first or second week of June. Now to the markets. Absolutely had a nice upside bounce today. And one thing that I can tell you that we haven't seen in a long time is really follow through in the market. Now, in terms of a straight candlestick pattern, and this is where it gets a little bit odd, but in terms of a straight candlestick pattern, you don't get really, there's no engulfing bullish here, there's no piercing line, and that's because the open itself, as we look at this gold contract right here, does in fact open above the close of this prior red candle. Otherwise, it would be an engulfing bullish. But we had that tremendous uptick yesterday, and we've absolutely got follow through today. Now, I'll show you on another chart in which we can look at this as a breakout above a long-standing resistance line. But as you notice, we do have our Elliott wave count in, this being our short Elliott wave count. I'll show you the long in a little bit. First, let's take a look at this breakout that we're looking at. So traders, here's what I meant by looking at a breakout. As you can see, by simply looking at this high right here at around 1300, and I put this in yesterday, it's based on this top here and this top here, this bottom and this bottom. That gives us our lower level support, upper level resistance. Absolutely, a case can be made for a breakout in this market. Now, in terms of where the market is, we are now above really a series of tops that was critically important. Those all culminating at around 08 to 10 right in this area. And so it is absolutely a bullish sign. I really want to see how the market reacts at these upper level tops, because my fear is to get into the market right in here at about 13, 14, 12 in that area and watch it, for example, simply bounce up to this upper level, hit resistance, move down, is not going to do us any good. Also, we want to take into account our short-term wave count, and our short-term wave count really is looking at an A, B, C. Of course, we've got a bear count. That's this high up here at around 18 to 21 right in here. And then from there, we really get our 5 count down. 1, 2, 3, 4, 3, 4. And so we should actually be in some sort of a fifth wave. If in fact this became the low, it would be a truncated wave, but longer term, we are looking for this market to go a little bit lower. But in the context of the fact that we could see this market move lower, what I really wanted to look at, this is of course is a long-term study, this being a weekly chart. And if we take a look at it in terms of our wave count, in essence, and these are really looking at our majors, our major 1, major 2, this tremendously long major 3rd, that's the 3rd wave that took us up to 1920. We have been insistent on believing that we were in this 4th wave correction. The question is where it will end, and once it terminates and we actually go into some sort of 5th wave, that's when we would really look for a tremendous rally in the market. Traders, I don't think we're there yet, but it is certainly something we want to keep our eye on. So traders, as I said, on a straight candlestick chart, if we are looking at the COMEX, because there's a true open and a true close in that, in reference to our what we call our FX or spot gold, meaning Forex, which is a continuous contract, when we look at that chart, we truly get, of course, an engulfing bullish, because the way that they fix that is the close is transferred over to the open. And so for that reason, on this particular chart, we do get our engulfing bullish. And today is absolutely a confirming candle. We're trading up at around 12.12 right now, 12.11, 12.12. And my question is, are we going to get a close really above the bodies of these tops right in here? That's what we'll have to see. If we can get that, we have a real sense that we've got a true breakout happening. I believe that we still have plenty of room to the upside. However, I do not want to really jump the gun as long as we're still within this defined range. Some of the other markets that we're looking at, and as we prepare to launch this new service, the markets that we will be following on the new service, they will be individual modules. But for now, we are going to be bringing them into the fold here at the Gold Forecast through this month, of course. A dollar index, you can absolutely see that we have had some continuation of the downside that we have seen. This market absolutely hit resistance up here roughly at 100 and is absolutely moving lower. On to some of the other markets that we're looking at. Of course, Standard & Poor's closing up about 7 points on the day to 2112. In terms of our Dow Jones Industrial Average, closed up about 72 points. Also, the NASDAQ, that did close a little bit lower on the day, down about 5, but still well above 5,000. And crude oil, in essence, unchanged on the day. Traders, which takes us to silver. And in terms of what we're looking at in silver, the one thing that I find pretty interesting, and we're getting it also in gold, but if you look at this MACD, you can see how you get this hook in which you've got the short-term hooking above the longer-term MACD line. So that hook is significant. You're getting that at the same time you're getting this second day or follow through this uptick. When we take a look at some of the Elliott wave, this being our longer, or I would call this an interim term on our daily chart, what we're really looking at is wave 3, wave 4 here, and that we are currently in wave 5. So the question is, has wave 5 terminated? If so, what we would be looking at would be what's called a truncated fifth on the way down. So we'll have to take a look at that. And you really want to take that into account with the longer term studies. And let me go ahead and bring that up here. This would be our longer term studies in silver. And you can see this long progression down. And in terms of a major count, you're looking, we are in wave 5 of 5 right in here. So the question is, we've seen this market really drift lower. We've had this nice surge. This, of course, is a weekly chart. And the real question is, just as we looked at in our gold chart, is that at some point, we will terminate the long-standing correction that we've had in the precious metals markets, and we should see them move higher. The question is when. I'm not convinced that this is that time, but when that time comes, We absolutely want to be prepared for it and profit from it. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.